Hey everyone, it's Evan here from the Trade Risk on Wednesday, August 23rd, here with a midweek market recap video. We're going to cover all of the major markets, the current market environment, and then finish off looking at some sector analysis. And we're going to jump right into things today with the S&P 500, the SPY ETF finishing lower, 87 cents on the day. That's minus 0.35%. If we zoom in here, you can see this is what today's session looked like. We had an inside day, completely traded inside of yesterday's price action. Now, if we look at how we traded this week, where we've come from this week, Monday set the scene for a bit of a reversal here. We tried to break to new lows. In fact, we did break to new lows intraday, but you can see buyers did kind of step in here off of the lows, drove us off those lows, finished in hammer fashion to close out the day on Monday. Tuesday, powerful follow through to the upside. This was a 1% up day here on Tuesday, yesterday, price action. That was very encouraging to see the bulls really defending these lows here for really kind of a second time in a row. A little bit of an overshoot on this double bottom, if you will, but nice follow through on from Monday's reversal, and then today really just a dud, kind of moving sideways, but setting the scene for perhaps some more fireworks into the end of the week. So if we look at a weekly chart, you can see we're up 77 basis points here on the week, and we are above last week's lows. We are above August 11th lows. This week where we started this down move to the downside, we are above both of those lows. So near term, that is constructive to see. If we go back to the daily chart, it is nice to see that we got kind of a thrust off of, call it 243, this general area here. I'm not going to put a precise level to it, but effectively encapsulating the washout lows here from Thursday on the 10th, and then last Thursday on the 17th, and then this price action on Friday and Monday. We're above that, and we're kind of just hanging out here in the middle of this range. We have resistance up here. We have a series of lower highs. We could have a trend line that you could extend down from this lower high, but really you have a lot of supply up here right around 246, 247, and we're just dead right in the middle of it. And for me, the way I look at markets and interpret markets, this is really a place where you want to be careful not to get tripped up, not to do too much, not to fight and put on positions, because you're in no man's land when you're in between just really the dead center of a sideways 8 and 20 period moving sideways, bearishly aligned. This is just, a headache waiting to happen. If you're aggressively putting on positions. Again, if you're more active, if you're day trading, it's an entirely different story. It always is time frame dependent when we give this analysis. So you always have to keep in mind what your strategy looks like and what your time frame is. But in general here, this is a spot where, for me at least personally, I want to see the market just kind of move through, let it get to more of an extreme point, either back down here, back up here, more sideways in here to coil up and get a more sort of definitive move out of this range. Those are things that I'm going to be looking for, not looking to do a whole lot more where we are right now. And the same sort of disclaimers and the themes from the last couple of videos, having some more cash right now, not trading every day, picking your spots, being defensive, those are things that I still think are very much appropriate in this environment. Doesn't mean you have to be fully cash. Doesn't mean I think the world's going to end. It just simply means this type of price action here looks at the very least sloppy and needs some time to move sideways. Could very well resolve higher, lower. Who knows? We'll see when we get there. So that's my overall take here on the S&P 500. You can see, I guess the last point here, you can see we're right back to this trend line, which extends from the year-to-date lows. So right from January, we had this uptrend that the market was just kind of treading above. And you can see we're kind of back testing it from underneath here, and we're stalling right at it right now. So that's all I have to say for the S&P 500. Sideways action. I like the fact that we got this thrust higher to start the week. I like that we're above these lows, but it doesn't mean it's an easy long to the upside. So that's the S&P 500. If we look at the IWM, kind of similar comments here. Got that reversal on Monday, follow through on Tuesday. Not quite an inside day here on Wednesday, but traded most of this today's session inside of yesterday's range, and we really just kind of want to see if the bulls can continue to hold up here and not give back, not roll back over. 8 and 20 period, much more sharply, aggressively moving lower here. So IWM still looks from a technical structural standpoint to be in a tough spot. The NASDAQ 100, on the other hand, best in class of the three major averages here. You could see much more sideways action. We're above a very definitive sort of maybe overshoot double bottom lows here right around 140, 141, and we're just sitting right on a sideways 8 and 20 period moving average. So again, headache looks very much in play here for the NASDAQ as well, but you could argue much more sort of healthy consolidation moving sideways. If we start to lose Monday's lows, that all of a sudden starts to change. You get this gap back here from the 12th. Let's keep that in mind. Pointed that out in last week's video. So that is the environment overall. We do have a Jackson Hole event, Fed event tomorrow, so that could lead to some sparks here in the market. If there are some headlines that come out of there that the market wants to latch onto, that could be a catalyst. Otherwise, we really just kind of want to see, can the bulls hold some of this strength here into the end of the week? Can we get a close off of recent lows? That'd be a first step in sort of improving and perhaps moving more sideways in this recent range. So that's the market. Let's take a look at some of the other major markets. We'll go to TLT next. You can see finishing the day here at the highs on Wednesday. If we go to the weekly chart, you can see above last week's highs as well, and we're starting to just really kind of grind out here and move higher. This is a position that I'm still in. We've sort of talked about this position that we got involved in to start off the month back here on the 1st of August. We did scale out half of our profits in this trade. I believe it was Thursday or Friday, but it was recently where we scaled out half of our profits in this trade, and we still have half of this on. We're letting this run. Still like it. Going to continue to trail a stop. If we start to break below, call it 126 or so, I'll probably be out of this trade. But for now, bonds look like a good place to be. They're a little choppy, but they are grinding out new highs here. Still of the belief that we can get back up here and sort of retest the June highs here. That was the original trade thesis. We'll see if it actually happens. So TLT, long position of ours. So far, so good. USO stabilizing here. It had this trend line break. No real big upticks in volume on that trend line break, but we are starting to stabilize here, and it looks like the bulls are trying to defend this 950 level or so. I think the proof comes back above $10 if we can get a sharp move above, say, last Friday's highs here. I think the USO, I think the oil bulls at least save this in the near term and could put a little bit of a squeeze on here, but it's still kind of a dicey situation. The 8 and 20 period right at price right now, kind of volume just really drying up recently, so it'll be interesting. Not so interested in placing a trade there myself, but something to pay attention to. Natural gas, this is a trade now that we are in. We got long natural gas on here on Monday of this week. We are down a bit on this trade. Yesterday had a little bit of a down session there, reversal today, kind of a reversal to the upside, but just choppy, moving sideways here. I basically like this potential bottoming formation here, really, as long as we can hold above this 640, 645 area. I really want this to hold as sort of a higher low that's in place, and if it does, then I'm looking for a move to perhaps retest these highs up here right around 680, 690 or so. I know the weekly chart isn't the most ideal situation here. You get the 8 and 20 moving sideways or bearishly aligned and lower, but you can see price battling that 8 period moving average. So we'll see if this can actually hold in here right around the 640 level and lift back up to retest those highs. That's what I'm looking for, a current long position of ours. So that's UNG. That's is that everything? No, we got metals. Let's take a look at metals real quick. So you can see GLD still staying resilient here. Short-term uptrend remains higher. Weekly chart, you can see trying to clear above these pivots here from May and March. So there is some structural kind of breakout, action in motion. It's not really, the cleanest setup in my eyes, but I certainly see what some of these bulls in gold are looking at. And if we can start to get continuation and move out of this range and above these past highs highs over here for multiple months. That can be constructive for sure. That is a win in the short term if they can. Silver is more interesting here to me, just in the for a short-term trade anyway. Look how tight and sort of coiled this price action is here over recent 16 to 1620 level. If we can get a sharp move above 1625 or so, that should unlock some nice continuation there, or at least a short-term squeeze. So I'd pay attention to that. You know, basically going into the end of the going into the end of the week and into next week. So that, I think, covers all the major markets. Let's take a quick look at sectors here. There's not a whole lot to look at. Things are kind of sloppy. XLU, though, is sort of a standout runaway here. You can see on the weekly chart, especially, we are breaking to new highs here. So XLU very much continuing in this uptrend and looking strong. XLK, very similar to the Qs, also holding very resilient. This consolidation looks very bullish as of now anyway, versus some of the other components out there and some of the other major averages. So XLK still looks good. Let's take a look at IBB. You can see even starting to stabilize here off this double bottom. We talked about this sort of 309 to 310 area right in here. If we can get back above it, I start to like IBB again. I really just want to be back above, you know, a lot of this supply in here from July, and I think it's, you know, it's realizing that there's, you know, there's prior supply in here, and the market is respecting that level. So I think it's something to pay attention to. Above 310, I start to like IBB a bit more, and XLF is holding really just by the skin of its teeth here at the prior lows from July. So I think, you know, as long as it can stay above 2460 or so, which it's just about doing, I think it can still be kind of an innocently consolidating market here. If we start to, you know, really roll over from these current levels and start to continue lower, then it's just going to be in a tough situation. If we go to what's really starting to look a little more ugly, XLI was much heavier today, closing right at the lows, almost giving back all of yesterday's gains. So XLI looking fairly vulnerable here. IYT also very heavy right now, following, you know, closing at the lows and basically completely taking out yesterday's price advance to the upside and really just almost making new lows here. So IYT very vulnerable, looks kind of the worst in here. Can it do a quick stick save here and gap up tomorrow and catch people off guard and start to run? Sure, but right now from a structural perspective here, IYT definitely looks to be one of the worst in class here compared to some of these other major components. And I think that's it. There are some more, nothing all that interesting from a sector basis beyond what we just covered. So hopefully this video helps. Hopefully you guys are navigating these markets efficiently. Thanks so much for watching. If you're new here, don't forget we do these videos Wednesdays and Fridays, the weekly recaps, and we do some trade ideas and some other stuff in between. So do subscribe to our YouTube channel. In the bottom right-hand corner, you can find that subscribe button if you like what we have to talk about. Thanks again for watching, and talk to you guys again soon.